So let's talk about what we saw coming out of China at the weekend. The stimulus, pretty underwhelming. It lacked concrete details. That's been the overwhelming feedback that we've been getting. Do you think this was a token gesture or a genuine attempt to revitalize China's struggling economy?
I think you'll see successive measures coming out. And the problem with the Chinese is they can't just dump everything at once. They still need legislative approval. I think they tried to tee things up a little to follow the American announcement of the interest rate decline. But expectations, I think, got ahead of them. And so they've tried to take a little bit of the steam out of the bubble by being more calm and thoughtful and methodic about how they lay these out. But I think you'll just see more and more stimulus measures coming out of the subsequent days.
Okay, so what are they going to look like? Because when you look at the situation on the ground, and you know it better than most anyone. You've actually got a presence there. You spend a lot of time in mainland China. The export data continues to disappoint. The deflation risk is rising. Trade tensions ramping up. Beijing is a little too focused on stimulus and short-term measures rather than the structural reforms that this economy needs, no?
Well, certainly the structural stuff's going to take decades. I mean, there's no quick fixes there. What we need to try to do right now is stimulate demand. And the way you stimulate kind of consumption and domestic demand is through getting people to feel confident that their bank accounts are going to continue to grow, that the equity value in their homes isn't going to continue to decline, that their stock portfolio will grow. And so many of these measures that you're going to see over the coming months are about kicking people's money out of banks and into either the public markets or the high street.
And that's a challenge in China, right? Because the personal savings rate is so high. So what will it take to unleash these green shoots? What is the number needed to really invigorate this economy? We've been talking to experts who say we need a figure ranging between 4 to 5% of GDP to effectively stimulate consumption and address some of these deflationary pressures. Are we going to get it?
I don't know if you get a headline number. You know, that was the thing that underwhelmed the news conference last week. They were hoping for $2 trillion and they got $200 billion. So you're going to see small measures. For instance, today there was an announcement perhaps that they're going to lower the interest rate on time deposits in bank accounts, meaning that people have less of an incentive to keep their money back home because, you know, there's $21 trillion of household savings sitting on the shelf compared to about $900 billion in the U.S. So there's plenty of money there, but people need to be incentivized to get it out. And that means lowering the interest rates, making sure their stock portfolios are okay, and making them feel, again, that the economy is on the right trajectory. So the numbers you mentioned are a bit lagging indicators. We'll have to see what happened from Golden Week and over the next couple months.